So where are the markets headed? Demand scenario? Let's discuss all that and much more with Mr. V R Sharma, Managing Director of JSPL. Mr. Sharma, after a tough few months, steel spreads are slowly inching up. What is your experience? I mean, are you also getting a sense that product prices are going higher?
Yes, good morning. We feel that this is a good time, and I have been talking on this subject for the last 4 or 5 months that mid-November the steel prices should go up, and this is what we found, that in the month of November at least 5% there is an increase in the prices across all the products. The demand is picking up slowly, gradually, and the steel industry is on the revival mode.
You know, your Q2 realizations, they fell by about almost 2,400 rupees per ton from the previous quarter. Since then, what's the kind of rebound that you've seen, and how has it been for both long as well as flat products?
Yes, you know, Q2, the effect of the coking coal prices, because the coking coal in Q1 was at a level of $210 to $225 per ton FOB Australia. Now it is at $130 to $135 per ton FOB Australia. So that impact, it was supposed to come in Q3 only. So this we have started realizing in Q3. So Q3, the loss of EBITDA, what we are seeing, the downfall from 11,000 plus to 7,400. So that was basically because of coal prices. So I think now in Q3 and Q4, the effect of coal prices will definitely be seen. And we are expecting that from December onwards, the EBITDA should be around 10,000 rupees per ton.
What happens now that you got coal blocks? What happens to your cost? What happens to your savings? When will the first incremental coal from the new coal box which you won at the auction will start coming in?
Yeah, this coal block what we have won the auction, that is for the primarily steam coal and the coal for the DRI, not for the blast furnace. The coal what we are importing from Australia or from Russia, these coals are meant for the blast furnaces. That is steam. That is not a steam coal. That is a coking coal or metallurgical coal. The coal block what we have won now, that is Gare Palma 4. We are the highest bidder. We are yet to receive the confirmation from Ministry of Coal and Mines. As soon as we get this clearance and they hand over to us, then we'll start doing mining. And this will take, I think, if they clear within the month of December, then by March we should be in operation. This will definitely increase the productivity as a whole, because there will be a uninterrupted production of coal, which will definitely help in economy of scales and will be earning a good profit.
Okay. There are two ways of how steel realizations go higher. One, there is demand. Second, there is change in global prices, and then the currency interplay kicks in. Do you think whatever uptick we've seen in last couple of days has not been a function of local demand or local drop in inventory levels? It's all about currency and what's happening globally?
Yeah, there are three factors in it, rightly said by you. One is globally the prices are firming up. We have seen the scrap prices, metal prices, the metallic prices, they have gone up by $20 to $30 a ton. The hot rolled coil prices internationally have gone up by $25 to $30 a ton. Similarly, the billet prices in international market has gone by $20 per ton. So this is one area. The other area is the exports are becoming more viable because of the currency rate. Now we are working on dollar to rupee 71 plus. So this has also helped the steel industry and the other industry to export more. And this is what the steel industry is doing now. So two factors. One is on currency front we are comfortable, and secondly the international steel prices are going up. So in currency front, if you see import vis-a-vis exports, so it is a natural hedging, so we don't have to spend more money for the hedging, dollar hedging or forex hedging. So that helps us in a way that we can balance our imports and exports. There is no burden on the forex in the country. The third point is the domestic stocks. You rightly said by you that domestic stocks were exhausted. Most of the stockyards were stock out, and they didn't have the material. The last 3 months in the country, September, October, and mid of November, the weather-wise they were very bad, and we have seen that a lot of floods everywhere. And now the weather is stabilized, and next 4 to 5 months time should be good for the infrastructure industries and also for the construction industry. This will definitely drive the economy. The another big point, what Honorable Finance Minister has declared, that 25,000 crore rupees of package to the over 4,50,000 or around 5 lakh houses in the country. So that has given a very positive sentiment, and people have taken it very positively. Industry has taken it very positively, and over and above, the banks are advised by Finance Minister that they must drive the housing sector as a forefront or forerunner in the country's economy. You see, the building construction plays a very vital role, because the moment the building construction starts, the steel consumption starts, heavy and earth moving equipment they start selling, the heavy trucks movement that they start selling. So all of these companies, be it Telco, be it Ashoka Leyland, be it Mahindra and Mahindra, and the housing sector, the steel consumption for the rebars, construction bar, that will definitely be gainful.
Mr. Sharma, just wanted to understand, if coking coal prices are going down, will it also cap any rebound in steel prices as well?
You see, coking coal prices is very cyclic. In 1 year, 3 times they go up, 3 times they go down. So this is very strange behavior of coking coal suppliers. The weather conditions in Australia are good now, that's why they are mining it very well. But post this January, I think there will be heavy rains, and that there are as soon as the rains are there, then all of a sudden the disruption starts in coking coal mining, and again the prices may go up after March. So you know, this is high cycle. So what we are doing, that today the cycle is in our favor, so we are buying a good quantity, and we will average out in 12 months time that what is going to happen. But I think $150 should be the price on and average throughout the year. So over and above, the demand factor plays a very vital role. So today there is a demand, the steel demand has picked up. The country is coming up to buy the steel, and most of the infrastructure projects are supporting the drive, especially the water pipeline business. If you see in central India and the southern India, there are a lot of projects the government has announced for the water pipeline connectivity from rivers to the cities, major cities. So such a big and ambitious water pipeline plants are there. So these are going to drive the economy. So the water pipeline, they consumes a lot of steel. Similarly, the infrastructure sector, especially for the transmission towers, the demand has picked up very well. And with the help of Finance Minister, I think the building sector will also come up. Once the housing sector comes up, then again the demand will be picked up. The issue was the stockists didn't have any stock, and they were just waiting what is going to happen, whether the prices are going to fall or the prices are going to stabilize or looking upward. So now they have realized that the prices are not going to fall, and the prices are going to be either stabilized or going to up by 4 to 5% immediately, and that is why the demand has picked up.
Okay, just one last question, Mr. Sharma. The Sarda SLP has been listed on the 3rd of December. What legal processes and machinery is still left to be sorted out until you can finally lift the mines from Sarda? And say if all goes well on this front, on the Sarda front that is, to what extent then will it cater to your iron ore requirement?
You see, this is a very critical and very sensitive issue. I can only tell you that what are our stakes today. We have millions of ton iron ore lying in SMPL in Sarda, in their premises. This is royalty paid, duty paid for the last 6 years. This material is lying there. It is amounting to thousands of crores rupees. So what we are expecting from the government and from Honorable Court, that we should be allowed to take out our material so that we can run our plants, and especially at the time when the iron ore shortage is expected in the month of March to April or May. So this is what our expectation, this is our request to the government and to the Honorable Court.
But do you think that if all goes well, it's bound to get prices down for you?
One is pricing down because this material is already duty paid, royalty paid, and this is hypothecated to bank. So the banks will also be comfortable once the material starts flowing into our company because it is already financed by them. And we will also be comfortable that the material is coming, then we don't need to buy material for iron ore from outside. This will definitely help to the country, to the nation, because the time when there is a iron ore shortage, which is likely to be from March onwards, then this will be great respite to the industry and to us as well.
Thanks so much for joining us then this morning, Mr. Sharma, and talking us through some of the latest trends there.